My name Muhammad Faris Ikhwan bin Muhammad Azizun. My student ID 20244409194.
My name is Niknur Kisina Balkis binti Azamai. My student ID is 2024634272.
My name is Shahnina Uzma binti Sarudin. My student ID is 2024246134.
Hi, my name is Siti Nur Atira binti Muhammad Sofi. My ID numbers is 2024241444.
My name is Nur Amali Sofia binti Zakaria. My student ID is 2024431428.
The company was founded in 2005 right here in Kuala Lumpur, Malaysia by Tan Yu Ye and Tan Yu Wei. Their initial concept was to start a simple hardware store. However, they quickly expanded into a home improvement retailer, offering a much wider range of products. Their tagline, which is the core of their business philosophy, is always low price. This tagline perfectly encapsulates their focus on providing affordable product for everyone, ensuring great value for their customer. Moving on to their impressive growth, they currently operate over 100 stores in Malaysia and have successfully expanded regionally into Thailand, Indonesia, Brunei, Singapore, Philippines, and Cambodia. This rapid expansion highlights their success in the home improvement retail sector. A significant milestone in their history was being listed on the main market of Busan, Malaysia in 220. To serve different customer needs, they have established several key sub-brands like Mr. Toys, Mr. Dollar, and Mr. Thrift. Finally, let's look at their core objective, which guide everything they do. First, to become a leading home improvement retailer in Asia. Second, to offer quality product at low price. And the third is to provide convenient, accessible, and well-organized store for a pleasant shopping. Working capital refers to the difference between a company's current asset and current liabilities, which are necessary for daily operations. Maintaining a healthy working capital is crucial for business success, ensuring uninterrupted activities, strong credit worthiness, and credit sale, supporting sales and revenue growth, and offering protection against financial difficulties. The main objective of working capital management are to maintain smooth operation, optimize current assets and liabilities, maximize liquidity, and improve efficiency. This management also aims to optimize inventory levels, sound credit policies, and minimize operational costs, ultimately improving profitability.
This slide shows the categorization of asset and liabilities for Mr. DIY Group as of 31 December 2024. On the left, we have the company's total asset amounting to about Rm 3.8 billion. The major components include right-of-use asset, inventories, property, plant and equipment, and cash balances. These represent the resources the company owns and used to operate its business. On the right side, we see total liabilities of around Rm 1.86 billion. These include lease liabilities, trade and other payables, borrowings, and provisions for restoration costs. These represent the company's obligation that need to be settled in the future. Overall, the slide highlights the company's financial position by showing what it owns and what it owes, providing a snapshot of its stability and operational capacity as of year-end 2024.
Okay, we go to the next slide. I want to highlight the temporary versus permanent current assets. We go to temporary current assets. Temporary current assets are the short-term resources owned by a business that are expected to be converted into cash, sold or used up within 1 year or within the company's normal operating cycle whichever is longer. For example, temporary current asset is inventories, trade and other receivables, current tax asset, and last cash and bank balance. Next, we go to permanent current assets. Permanent assets, also known as fixed assets or non-current assets, are the long-term resources owned by a business that are used continuously in its operations for more than one accounting period, usually more than 1 year. Example permanent current assets are property, plant and equipment, intangible assets, right of use assets, investment in associated assets, and last deferred tax asset.
Let us start by looking at the key financial figures from Mr. DIY Group's balance sheet as at 31 December 2024. The company reported current assets 1.51 billion ringgit. These include items such as inventories, receivables, and cash, assets that are expected to be converted into cash within the next 12 months. Meanwhile, current liabilities total 635 million ringgit, which represent short-term obligations that the company needs to settle within a year. When we compare current assets with current liabilities, we get a positive working capital of 879 million ringgit. This is a very strong liquidity position. It tells us that Mr. DIY comfortably has enough short-term assets to cover its short-term debts, which reduces liquidity risk and shows the company's ability to manage daily operation without financial pressure. These numbers provide the foundation for understanding how Mr. DIY finances both its short-term activities and its long-term investments. Short-term financing mainly comes from current liabilities such as trade payables, short-term loans, lease liabilities, and tax liabilities. These short-term sources are typically used to finance current assets like inventory purchase and receivables, helping the company support its day-to-day operations. On the other hand, long-term financing comes from equity and non-current liabilities. Equity consists of share capital and reserve, while long-term borrowings and long-term lease liabilities from the debt component. These long-term funds are more stable and are primarily used to finance long-term investments, especially fixed assets worth 2.28 billion ringgit. When we put all this together, we can see that Mr. DIY follows a conservative financing approach. Not only are fixed assets funded using long-term sources, which is the ideal matching principle, but part of the long-term financing is also used to support current assets. This is reflected in the company's strong positive working capital. Overall, this financing structure shows that Mr. DIY prioritizes financial stability, maintains low liquidity risk, and ensures it has sufficient long-term support to sustain operations and future growth.
Working capital strategies describe how a company finances its current assets. Temporary current assets are usually financed after considering spontaneous liabilities such as account payable and accrued. For Mr. DIY, the company applies a conservative approach. This means the company relies more on long-term financings to support its assets, which makes the business financially stable. Based on the calculation of the current ratio, the company showed a strong liquidity position. A higher current ratio indicates lower risk, although it also comes with a lower return. In summary, Mr. DIY prefers stability and low financial risk, which match the characteristic of a conservative working capital strategies.
The firm adopts the relaxed working capital policy for its investment strategy, which is consistent with the risk-averse conservative approach. The policy is defined by maintaining high level of current asset relative to sales to ensure greater liquidity and substantial safety buffer. The trade-off remains the The trade-off remains low risk but low return as excess liquidity reduces productivity. The current ratio of 2.38 directly validates this relaxed policy, confirming the high level of current asset requirement. The firm utilizes the conservative working capital approach for its financing strategy. This approach is dictated by principle of lowest risk through heavy reliance on stable long-term financing to cover fixed assets, permanent current assets, and a buffer of temporary current assets. The trade-off of this stability is accepting a lower return. The high current ratio confirms an outcome fulfilling its goal of operating at lowest possible financial risk. Finally, the mechanism ensures that during period, the firm buys short-term securities, and during peak period, the firm sells off its short-term liquid investment and borrows short-term if necessary.